Hi, I'm Dave Rubin. In this video, we break down how credit scores really work and why an 800-plus score isn't about luck or income. It's about understanding a simple financial system that most people get wrong. From payment habits and credit utilization to long-term credit history, you'll see exactly what separates average scores from excellent ones, and how small changes in your behavior can unlock better financial opportunities. An 800-plus credit score is not something you get by chance. It comes from following a proper financial system that most people misunderstand or ignore. Most people assume that credit score is random or based on income, job type, or luck. But in reality, it is completely behavior-driven. It is built on consistent financial habits that are tracked over time by credit bureaus. The system is actually very structured, and once you understand it, you realize that reaching a high score is not complicated, but it does require discipline and patience. At its core, a credit score is simply a reflection of how responsibly you manage borrowed money. It does not care how much money you earn, it only observes how you handle debt. For example, paying your bills on time is the most important factor because it shows reliability. Even a single missed payment can damage your score significantly because it breaks the pattern of trust. On the other hand, consistent on-time payments over months and years build a strong financial reputation that lenders reward with better credit offers and lower interest rates. Another major factor is credit utilization, which means how much of your available credit you are actually using. People with high credit scores usually keep their usage low, often below 10%. This signals to lenders that you are not dependent on credit and can manage your spending responsibly. Even if someone has a high income, maxing out credit cards can still hurt their score because the system sees it as financial stress or over-reliance on borrowed money. The length of your credit history also plays an important role. Older accounts that have been managed well over time help increase your average credit age, which strengthens your score. This is why closing old credit cards can sometimes hurt your credit profile, even if you are not using them. The system values long-term consistency over short-term activity. Credit mix and number of accounts also matter, although to a lesser extent. Having different types of credit, such as credit cards, loans, or mortgages, shows that you can handle various financial responsibilities. It adds depth to your credit profile and improves overall scoring potential. Finally, hard inquiries represent how often you apply for new credit. Too many applications in a short time can make you look financially unstable, which lowers your score temporarily. However, this effect is usually short-term if managed properly. In simple terms, an 800-plus credit score is not about tricks or shortcuts. It is about understanding the system and behaving in a way that aligns with it consistently over time. If you found this explanation helpful, make sure to like this content and follow for more simple breakdowns of complex financial topics. And if you want, check out the next guide where I'll show exactly how to improve your credit score step by step from scratch. If your credit score is not going beyond 750, the issue is usually not your income or job. It's one small but repeated financial mistake in your habits. Most people assume that earning more money automatically leads to a higher credit score, but that is not how the credit system works. Your income does not directly affect your credit score. Instead, your behavior with credit and debt is what determines whether your score improves or stays stuck in the same range. When someone stays below the 750 mark for a long time, it usually means there is a consistent pattern holding them back. It might not be a big mistake, but rather small actions repeated over months or years that slowly limit progress. For example, one of the most common issues is credit utilization. Even if someone pays their bills on time, using too much of their available credit each month can signal risk to lenders. Keeping balances too high compared to credit limits creates a pattern that prevents the score from reaching higher levels. Another common habit is inconsistent payment behavior. While someone may not be missing payments entirely, paying late, even slightly late, can still affect the overall credit profile over time. The system values precision and consistency. Small delays or occasional lapses may not destroy a score, but they can stop it from reaching top-tier levels. A third factor is how often new credit is applied for. Many people don't realize that every new application creates a hard inquiry, and too many of these in a short time can make a person appear financially unstable. Even if the intention is just to get better rewards or higher limits, the system interprets frequent applications as increased risk. Credit history length can also play a role. If someone keeps opening and closing accounts frequently, their average credit age may stay low. This prevents the score from climbing into the highest range because the system prefers long-term stability over frequent changes. The key idea is that staying below 750 is not usually about major financial failure. It is about small habits that quietly repeat over time and prevent progress. The credit system rewards consistency, low-risk behavior, and long-term discipline more than anything else. People with 800-plus credit scores don't rely on luck. They follow specific behaviors like payment discipline, low utilization, and long credit history. A very common misunderstanding is that high credit scores belong only to people with high income or special financial advantages. But in reality, the credit system rewards consistency and responsible behavior more than anything else. An 800-plus credit score is usually the result of long-term habits that are repeated correctly over many years, not something that happens randomly or quickly. The first and most important behavior is payment discipline. This means always paying bills on time without exception. People with high credit scores treat payment deadlines as non-negotiable. Even a single missed payment can have a lasting negative impact, so maintaining perfect or near-perfect payment history is essential. Over time, this consistent behavior builds a strong trust profile with lenders, showing that the person is reliable and financially responsible. The second key behavior is low credit utilization. This refers to how much of your available credit you actually use. High-score individuals typically keep their usage low, often below 10%. This is important because it signals that they are not dependent on borrowed money to manage their lifestyle. Even if they have access to large credit limits, they only use a small portion and often pay it off quickly. This creates a stable and low-risk financial profile in the eyes of credit systems. The third factor is maintaining a long credit history. People with 800-plus scores usually have accounts that are several years old, and they avoid unnecessary closure of old credit lines. This is because credit scoring models value the average age of accounts. A longer credit history shows stability and experience in managing credit over time. It proves that the person has handled financial responsibility across different periods without major issues. When these three behaviors come together, consistent payments, low utilization, and long credit history, they create a strong foundation that naturally leads to a high credit score. There is no shortcut or quick trick involved. Instead, it is a system built on discipline and patience. If you want an 800-plus credit score, focus on building these habits consistently rather than looking for shortcuts or quick fixes. Having multiple credit cards is not a negative thing. In fact, when used correctly, it can actually help increase your credit score significantly. Many people mistakenly believe that owning several credit cards automatically harms their credit score, but in reality, the credit system does not punish you for having multiple accounts. What matters is how responsibly you manage those accounts, not how many you have. One of the biggest advantages of having multiple credit cards is the increase in your total available credit limit. When your total credit limit is higher, it becomes easier to keep your credit utilization low. Credit utilization is the percentage of your available credit that you are actually using, and it is one of the most important factors in your credit score. For example, if you only have one credit card with a small limit, even normal spending can push your utilization high. But if you have multiple cards with higher combined limits, your spending represents a smaller percentage overall, which helps improve your score. Another benefit is payment tracking and flexibility. With multiple cards, you can distribute your spending instead of relying on a single account. This can help you manage your monthly cash flow more effectively and reduce the risk of maxing out one card. Maxing out a credit card can negatively affect your score even if you pay it off later, so having more cards provides a buffer that protects your utilization ratio. Multiple credit cards can also contribute positively to your credit history over time. Each account adds to your overall credit profile, and when managed properly with consistent on-time payments, they strengthen your credit record. Lenders see this as proof that you can handle multiple financial responsibilities at the same time, which increases your reliability as a borrower. However, the key factor is discipline. Having multiple credit cards is only beneficial if you are organized and responsible with payments. Missing payments or overspending across multiple cards can quickly damage your credit score. The goal is not to collect credit cards for the sake of it, but to use them strategically to build a stronger credit profile. In simple terms, multiple credit cards are a tool. When used wisely, they improve your credit utilization, strengthen your credit history, and increase your financial flexibility. But when mismanaged, they can create the opposite effect. That is why the real difference is not the number of credit cards you have, but how effectively you control them. If you understand this principle, you can use multiple credit cards as a smart credit-building strategy instead of seeing them as a risk. A strong credit score is more than just a number. It can unlock lower interest rates, save thousands in fees, and give you better financial opportunities. Most people think of a credit score as just a 3-digit rating, but in reality, it acts like a financial key that determines how expensive or affordable borrowing money will be for you throughout your life. Whether you are applying for a loan, mortgage, credit card, or even renting a home, your credit score quietly influences the terms you are offered. One of the biggest advantages of a strong credit score is lower interest rates. When lenders see a high score, they consider you a low-risk borrower. This means they are more confident that you will repay your debt on time. As a result, they offer you loans at lower interest rates compared to someone with a weaker credit profile. Even a small difference in interest rates can save you a significant amount of money over time, especially in large loans like home mortgages or car financing. A strong credit score also helps you save money on fees and deposits. People with lower scores are often required to pay extra security deposits, higher processing fees, or even get rejected for financial products. On the other hand, a strong credit profile can reduce or completely eliminate these additional costs. Over time, this translates into thousands of dollars saved simply because you are seen as financially trustworthy. Beyond savings, a good credit score also opens the door to better financial opportunities. You become eligible for premium credit cards with rewards, cashback offers, and travel benefits. You also have a higher chance of getting approved for larger credit limits, business loans, and mortgage approvals with better conditions. In many cases, people with strong credit scores are prioritized by lenders because they represent lower risk and higher reliability. However, it is important to understand that a credit score is not built overnight. It requires consistent habits such as paying bills on time, maintaining low credit utilization, and managing accounts responsibly over a long period. If you want to improve your credit score and start unlocking better financial opportunities, begin by tracking your credit behavior regularly and fixing one habit at a time. Small improvements today can lead to major financial benefits in the future. This content is for educational purposes only and should not be considered financial advice. Credit rules and benefits may vary depending on your country, lender, and individual financial situation.